Hey everybody, my name is Brandon from StockSims.com, and today I want to talk about the three stocks that I'm watching this week. Those three stocks are QuantumScape stock, ticker symbol QS, Zomedica stock, ticker symbol ZOM, and lastly Lockheed Martin stock, ticker symbol LMT. So now let's get started. So let's first start off with QuantumScape, the company that's trying to make solid-state batteries for electric vehicles. Obviously, the first thing that I want to point out here in the trading charts is the short sellers report a couple days ago. If we zoom in here, we can see that QuantumScape really gapped down around 12% that day on pretty heavy volume. If we zoom back out here, the Scorpion short sellers report was basically claiming fraud on a lot of technical aspects of QuantumScape's battery technology, and they talk about issues with the cycle life of the battery as well as Coulombic efficiency. Basically, the short seller guy from Scorpion was saying that QuantumScape was misleading investors about the efficiency of their battery technology. So let me know in the comments if you want me to do a full review on QuantumScape and go over the short report fully, but basically we can see here that the effect on the stock chart was that we broke this $40 support level, which we held a few times. We then fell to the $35 support level, which is made from the tops of these candles over here on the way up the mountain. So if I was to guess, I would probably say that we will probably consolidate around the $35 level for the time being as investors try to figure out which way to go. But if we look here, basically we see a ginormous trading range between this $40 level and this $60 level up here. Even from the $35 level to the $50 level, which is our resistance level made from this candles over here, we can see that that's like a pretty big 50% trading range depending on how you cut the numbers. A short-term trade could be something to look at if QuantumScape shows that it's able to hold water around this $35 resistance level and make a climb through the $40 resistance level upwards. But with that said, let's head on over to the earnings report here, and we can see that this is a pre-revenue company. They are not making any money right now. They are only spending money. We can see here that we are really turning on the faucet on the total operating expenses, which is this line on the earnings report here. We see that we are really increasing our operating expenses by about $25 million year over year, which is a change of about 45%. For me, even though this is a pretty big increase in operating expenses, I'm actually okay with that if they are putting a lot of money into research and development. Because again, investing in research is investing in your product and your business. To me, even though I do think that putting some money into general administrative is also important, I think that that is more investing in the big boss's sushi dinners than it is investing in the business itself. So for a company who hinges on a success on technology that they are developing, I want QuantumScape to be pouring as much money into research and development as possible so that they can create a cutting edge product to change the way electric vehicles move. And if we look here on the research and development spending, we see that yes, we are increasing spending by about $19 million year over year, which is a change of about 42%. And that's what I like to see. If we look at the general administrative spending, we see that yes, we are increasing our expenses by around 61% year over year, but that's a change of $6 million. So from this view, I do like that they are putting more money into research and development, but I still would like to see some cutback in the general and administrative spending. But more importantly than cutting back on the general administrative spending, I will actually want to see them cut back a lot on this other expense block here. Take a look at the other expenses. We are seeing an extraordinary loss from other expenses, about $1 billion. And honestly, I don't know what this is. Looking at other sections of the earnings report here, we can see that they do try to explain these losses vaguely here, saying that it's about business operations and some financing activities. I'll let you read through this on your own time, but for me, I'm still not completely sure what it means, and this is definitely a concern for me. So I have to do more digging to fully understand what this line on the earnings report is, and it is important because it is expenses that is contributing to our net loss. Again, my opinion is that QuantumScape is a pretty risky company to invest in at the moment. Investors have risks about the short report fallout, but also true risks that this is a pre-revenue company that does not have a product yet. Investors need to think about the real possibility that their technology won't work, not because the company is bad, but because that's what happens at the edges of science. This company is testing at the edge of science, and I can tell you from experience that that does not always work out. But if this company is able to create a solid state battery to put into electric cars, that would be a very impressive game changer that will likely change the world and will likely reward shareholders. So after talking about QuantumScape, now let's head on over to the next stock that I'm watching this week, which is Zomedica. So now let's go into Zomedica's trading charts, the company that has come up with the true former product for veterinarians. We can see here in the trading charts that Zomedica was really climbing up the mountain here, but then when the company announced the early commercialization of the true former machine through the first sales, we really started to fall back down here, back down to earth after we had our massive double top here. We can see ever since March, we've been really in a pretty well-defined downtrend. The reason why I'm watching the stock this week is because if we look here, we are right at the levels of where we broke out from before the majority of the hype around the stock started, around this 80 to 90 cent level here. Now, when we look at the fundamentals of Zomedica, we will see that there are some fundamental concerns with the company, mainly lack of revenue and its decision to raise a ton of money through financial engineering activities like secondary stock offerings that hurt investors. But if we look at the charts here, we see that there is a lot of volatility swings on most of these days. A lot of these candles here are swings of more than 10%. So if you get on the right side of the trade here, you could be able to capture a lot of the gains, but it is very, very risky. I'm not looking at Zomedica for a trade. I'm really watching it as an indicator for some of the other stocks like Bionanogenomics or Nano Dimension. If I can show a couple quick screenshots of their charts here, we can see that these charts do appear quite similar. Because of that, the reason why I'm watching Zomedica is not really for trading, because it's a little bit too risky for me, but it's really to get a gauge on the more speculative parts of the market this week. Now quickly, if we transition over to their earnings report here, we can get a fundamental overview of their business. Again, just so that we're all on the same page here, True Forma is a machine, and what a veterinarian does is that it takes a swab from the dog or cat, puts it in the machine, and then the machine outputs some diagnostic information on what could be causing the dog or cat to be feeling down from thyroid or adrenal issues. Honestly, the True Forma product is really the only bull case for the stock. About 67% of American households have pets, which leads Zomedica to have a huge total addressable market because each one of these pets is a potential customer for Zomedica. However, when we look at the earnings report here, I see a bunch of concerns with the cash flows. Again, as I've said before, looking at the cash flows here, we see that a lot of these cash flows are provided by these financing activities here. We see that we are able to capture around $76 million through financing activities. So these financing activities are the money that is generated from secondary stock offerings, and as a business, they are doing the right thing. They are raising all this money basically for free here by selling stock. However, as an investor, that's not what you want to see at all, unfortunately. So one of the good things with Zomedica is that they have a huge pile of cash to be able to play with here, which was supported by the stockholders. However, as an investor, that's not the only downside risk for Zomedica here. You also have risks with competition with competitors like IDEX Labs, which is a competitor that has been around since the 1980s and has around a $45 billion market cap, while Zomedica was founded in 2013 and currently has a cool $800 million market cap. The point I'm trying to make here is that Zomedica is younger and has a lot less money than its competitors. So the only way that they can survive is if they outthink the older and deeper pocketed IDEX Labs. The risk that an investor takes with Zomedica is that Zomedica cannot outcompete IDEX. So after talking about Zomedica, now let's head on over to the last stock that I'm watching this week, and that stock is Lockheed Martin. The last company that I'm watching closely this week is Lockheed Martin, the aerospace and defense company. So as always, when I cover these certain companies, I want to say again that this is a defense company. They do a lot of work testing out technologies for our next space race, but they also make a ton of real life missiles that are not just for show. Again, at least for me as an investor, I know that some investors only invest in things that fit their morals, and that's completely fine. It's your money, you can do whatever you want. But as always, the main point I want to make is that you should know exactly what you are investing in. So with that out of the way, the reason why I'm watching Lockheed Martin this week is because for a company that is not as fast moving or as exciting as some of the other companies that we've talked about today, Lockheed has really been on an elevator upwards, up nearly 20% from this low here last month, and that is kind of unusual for a not so exciting stock like Lockheed Martin. The reason why I'm watching the stock this week is because I want to see what happens at around this $400 resistance level here. I want to see if we get rejected and come back down, or if we are able to push through that $400 resistance level with momentum to continue towards the upside. And I think if we continue towards the upside, then Lockheed Martin may be a good candidate for a short-term swing trade for the 10% or so upside risk, or for a long-term hold because of the 2.5-ish% dividends that it gives. Again, for me, this is a diversification pick in my portfolio. I do not want everything in Tesla or Bitcoin, but I want some companies that dampen the volatility of my portfolio so that I can increase my upside potential while minimizing my downside potential. So with all that said, switching quickly over here to the earnings report, we can see a pretty stable business, and that is not surprising. What is surprising, however, is how much we're growing actually on the top line net sales here. We can see that year over year, we are growing pretty nicely year over year. And because we're not spending that much more in the business, this additional revenues here is carried down to the net earnings down here. So what that tells me is that Lockheed Martin is a pretty efficient business, and that is what I like to see for a long-term hold.